Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey there, MJ friends. So we'll check in on the action. Today we had a lot of green across the sector as SPY was green, so not surprising. SPY red pretty significantly, over 2% yesterday. Sector gets crushed. SPY green over 1% today. Sector rebounds. Hope you're noticing the pattern. We've certainly been following the pattern for years at this point with the correlation of the S&P 500. I remember people used to message me and argue that there was no correlation with the S&P 500, but fortunately it's become more and more clear at this point, and it is generally accepted. But we have an inside bar on CGC in a tightening range. We had a higher open, which is a bit of a shame, as I was looking for an oversold bounce play with that gap fill. But the higher open was due to the higher open in the S&P 500. We also had a couple news releases coming out in the sector. CRON specifically comes to mind. But overall, that play, the weak close into a gap down or weak open first thing, is no longer occurring in this space. And it happened the same thing with CRON last week when I scaled into my entry on Thursday. I made an entry with a weak close. I wanted to add more on further downside, but the bounce then went right the next morning. So it's a scenario where the market environment is always changing and our strategies have to change with it. And so these quick flushes in the morning, remember when we used to get those V-shaped bounces? When's the last time we've seen one of those? And the answer is not recently. And the reason, in my opinion, is because the market smartens up as to what is going on. And we see it priced in early. If everybody's looking for the gap down or the weak open first thing in the morning, we now see people trying to get in earlier and earlier and preventing that kind of flush. So CGC, we're watching a tightening hourly range. We had a higher low on the hourly trying to form at the end of the day. This now is occurring in extended hours. So we're going to have to see where we open tomorrow. If we break 47, make that 45.78, it's a daily inside bar bull break. And we will then be looking at the high of Monday up at 46.95. And if we drop down and break the low of consolidation 45.08, we'll have to watch the low of today. 44.61 is a key support level. Again, the pattern, 10 days in a row, lower high every single day. That has to break for any kind of shift in momentum for the bulls to turn things around. And right now we're looking for a weekly higher low to form compared to the previous low back down here, which was just under $40. And we have to see the daily time frame switch momentum in order for that weekly higher low to be found. Looks like TradingView is not wanting to cooperate right now. So CRON, on the daily time frame, we did see some follow through, and this was a wild swing that I've been holding. Stuck to my game plan, stop loss under 1390. It did not trigger. Bullish news this morning and a bull break over 1535 and 1540. Still nothing impressive. You could still make the argument that it is a daily bear flag at this point. We have to see a break of 1590 to give the bulls some comfortability of trying to get some follow through. So looking at it on the hourly time frame, a higher low at the end of the day down at 1517, and we need to see continuation first thing. If we break 1517 tomorrow morning, then we could stay in the tight range that we've been in the last 3 days. The strength we're seeing in after hours here, I don't believe ACB earnings have come out just yet, but we are seeing some ACB strength after hours, and I do believe that's the reason that we're seeing both CGC and CRON up a bit after hours. So that's something we'll be paying attention to, of course, as we head into tomorrow. But again, the strategy for CRON was hoping for a monthly higher low to form, and I would love to see this month close with a close over 16 to see a nice long lower wick on the monthly time frame. And on the weekly time frame, anything under 1767, just a lower high. My target for this trade, if everything went perfectly, with my entry down, my break-even point is down under 1390, but I'm looking for a bounce on the monthly time frame and to set a lower high in the low 20s. Of course, the S&P 500 is going to have to cooperate for that to play out as well, but we're watching for a monthly higher low, and then we would look for a bounce and a monthly lower high to form as well. I got too hot. Hair's probably a mess. We're going with it. ACB. So we have the earnings after hours. We have our higher low of support is 836. That's our short-term level. We don't know the reaction yet. There's not enough volume, so I can look at this volume and see that the earnings have not come out yet. So if we get a bullish reaction to earnings, we will look for a gap up open, and the key resistance is our daily lower high of 894. Anything under that is just a lower high on the daily time frame, keeping the downtrend intact. If we get a bearish reaction, we're looking right back at our recent low of 792, which would be about a 5% drop to get to that level. And after 792, we're looking down really at 733 as the next level after that. So I would expect ACB earnings to have an impact on the major names, as we are already seeing in extended hours, a little bit of correlation there. APHA, sideways trading. This is still a potential bear flag. It's a weak bounce attempt. Everybody needs more follow through. And even the S&P 500 and other individual names in the tech sector, tomorrow is going to be a very telling day as to whether the bounce that we've seen today is a bear flag on the daily chart, or whether we get follow through tomorrow and give enough space for the bulls to attempt to form a daily higher low. Not the exact setup on all of these MJ names, but tomorrow's a pretty important day for the market as a whole for proving. The bulls have proving to do to prove that we've priced in this trade war drama, and if we drop down back towards the recent low, then there's no proof from those bulls. So short-term resistance, 722, followed by 767, grinding support down here in the 660s, and we look at this on the weekly time frame, and it's a very weak bounce attempt. It's not even really a bounce attempt at this point. It's a weekly inside bar, and we'll have to see if that can break bullish. Keeping in mind for APHA and ACB, we are looking for monthly higher lows to form. Same with CRON, looking for that monthly higher low. Need a daily trend change at the bare minimum, and then we need a weekly trend change after that. So one step at a time. TLRY, what interests me here on TLRY is the fact that we confirmed a weekly bear flag and didn't get much follow through below that. We did drop down about 8 to 10%, but it's bulls buying the dip under that lower low. So if we can break 54.10 from here, that's going to be a fairly convincing signal that our temporary bottom is set. And looking at it on the monthly time frame, we've been consolidating ever since the all-time high. And if the bulls can form a monthly higher low compared to the all-time low, again, pretty much every major name in the Canadian MJ sector, we are looking for a monthly higher low to try and form. So the daily time frame, a little bit of back and forth. We have a low, high of the bounce, higher low. Bulls want to break 51 and 54.10. Look at these exponential moving averages. They crossed bearish. Look how long ago they crossed bearish. Back here at $120-something. And since then, we have rejected from a bull cross 1, 2, 3, 4, 5 different times. If we can get over 54.10, we'll be looking at a bull cross of the 12 and 26 period moving average, which would be notable to me for a shift in momentum for the bulls. OGI, a little bit of follow through, breaking the inside bar bullish. Remember, we're riding on the news event of the uplisting being approved. So we have our high of 1037. We have our low of the recent pullback down at 896, and we're looking for a lower high compared to 1037. So I would be watching for, ideally, I'd love to see the range to continue to tighten, give us an equilibrium, see SPY recover, uplist, and break bullish to a new all-time high. That would be a fun party. If we can just stay within striking distance of this all-time high once the uplisting occurs, and if the market can alleviate some fear, then that would be a real good setup for OGI bulls. So keeping an eye out for the lower high to be set, and we know when we lose the hourly uptrend, our daily lower high is then set, and we'll look for the range to tighten. Hourly higher low on OGI. Most clear level for me, nothing really, well, there it is. 937 was a level we established midday today as an hourly higher low. HEXO, nice recovery after the week close. Again, still in a pattern with a lower high every single day, just like CGC. Bulls have to break 694 to break that pattern. 694 and $7 are resistance. There's a gap at 710. We are looking for a weekly higher low to form, and it's worth watching for the break of that pattern for the bulls to try and shift momentum and see some follow through. Again, for any name to break the daily time frame, any bounce here, we're just going to form a lower high. So the more upside we see, the better. And if we see a move from here, that's not what I want to do. But if we see a move from where we stand and we only get up, let's see, 654 and we get up to 720, then the space that we have to form a daily higher low from 720 is much less than if we make a move up to 750. So the more space you get on the bounce, the more space you create for that higher low and potential trend change to form. And that's why the bounce follow through is so important. We know we're not going to change the trend on the initial bull move up, but it's the likelihood that we can change the trend from there that is changed by how significant the bull move does follow through. TRST, bullish reaction to earnings, but profit taking, no doubt. We broke the double top at 824, key resistance break. We filled the gap at 850, but we did see profit taking. I'm looking for an equilibrium to form due to the size of the range in between these hourly time frames. We have the low, we have the high, we have a higher low has to form compared to 795 tomorrow. Hold 795, potential bottom fishing play with that level, and we'll just be looking for an hourly bounce and a lower high, perhaps around 840, looking for a lower high compared to 867, and then later tomorrow or early Thursday, we will look for an equilibrium, the hourly equilibrium to break. If it breaks bearish, that is a very weak bounce with no follow through and a potential weekly bear flag. And if it breaks bullish, then we're going to see how much follow through we can get. And again, creating more space. We have not changed any trend. This move is coming straight off the low. So the more space the bulls can create, the higher the probability of a higher low and higher high to change the daily trend. This bull move is just in response to earnings and is not significant enough to shift momentum at this point. VFF bulls broke $13 but didn't get follow through. I missed that entry. I wanted to enter right on the break of 13, but was busy doing other things, didn't have my order up and ready to fill out, so I just moved on from that trade, accepting that I had missed it and not wanting to chase. So still struggling to close over 13. We were a bit extended. In the last 4 days, we've gone 30% essentially. So that is one thing that, we can cut the bulls a break to a certain degree, but we need a higher low to form on the hourly. If we lose the hourly uptrend, we've got resistance of 13.14 and 13.29. If we lose the hourly uptrend, we're looking for a daily higher low to have to form before we look for follow through. It's a bit of a red flag. The fact that we broke 13 and still closed 2% below that support level, more than 2%, it warrants caution. So if we do see the bulls hold 12.35 tomorrow morning and bounce back up towards 13, we'll have an hourly tightening range similar to TRST to be watching on VFF. But again, we need to close over 13 as we have been unable to do so 1, 2, 3, 4, 5 times now. TGOD, weakness definitely stands out. The close at the low of the day definitely stands out compared to the sector. So again, if you have most of the sector going green, any individual name that's red, and more specifically closing at the low of the day, that stands out that something's up. So we have a new resistance level on the daily of 405. We dropped 5% from that level, and if we see a bear break of 381, we're looking down at the next support level of 364. Bears still in control of TGOD. Labs, nice bull flag confirmation with a gap up open to all-time highs. So we had a little pattern here of a high, low, lower high, higher low, lower high, tight range, bull break on increasing volume. The break of 632 is when the bulls got real confident, and then we saw profit taking today. So the hourly time frame did lose momentum. We have the high of the day, low of the pullback. Bulls attempted to get back to the all-time high. They failed, and we closed with some weakness. So if we see a break tomorrow of 678, we then zoom out to the daily and we look for a higher low compared to 575. So bulls really want to hold the hourly double bottom of 678, but if we don't, gap to fill at 662, daily higher low needs to form. And bulls used up their momentum early in the morning, and it was profit taking from that point on. And it only lasted 10 minutes of bullish action and then just slow, drawn out consolidation. VGW also standing out very bullish as far as the 4-hour inverse head and shoulders pattern pointed out in the video yesterday. Left shoulder, head, right shoulder. The break was 428 and 432, breaking both of those levels at the same time, gave confidence to the bulls, nice strong close, and a clear shift in momentum on the daily tells us our weekly higher low is set. So our new support of 371 is our must hold for the longer term uptrend. And as far as the next resistance goes, after the high of today, we're looking at 457 and 490, still a very good looking chart overall. Curaleaf is starting to give us red flags. The correlation with the sector and the market as a whole has not been there the last week. We've seen the bulls hold up well in weakness, but now we're seeing a little bit of weakness in the face of sector strength. So again, just like I said for TGOD, we closed at the low of the day of Curaleaf, and we're clearly struggling at $15 over the last 3 weeks. And if we drop down and break 1380, the most important support level for me, that shows me a bunch of rejections and then the bulls getting exhausted and rolling over and the bears running with it. So 1380 and 1274 are supports. We're definitely a bit toppy up here, so want to be protective. And it's the kind of scenario where even if you're in long-term positions, it's the kind of scenario where I personally, what I look to do, if I want to have a long-term position, let's say for easy math, let's say $10,000. I got $10,000 in Curaleaf and I'm profitable and it's been going great and I want to hold long. If I'm not worried about taxes in the sense of selling and then rebuying, which would be a short-term taxable event as opposed to holding for over a year and being taxed less, if that's not a factor, I would look to potentially, in this kind of scenario, I sell on a clear bear break and then just reload. Whether it's reload the same dollar amount and more shares, or reload the same amount of shares and take some dollars off the table, that would depend on the individual company and the situation. But even if it's just a third or a half of my position, that can help me in terms of managing that position. So if we were to break 1380, and even if I reload at 1350, it's still worth it. 1360 would be worth it. Anything 0.5% less would be worth it. So that's just my style and how I actively manage. Even with my swing trade positions, I am actively managing them often to play off clear levels. CWEB. So CWEB is weak. CWEB has a very clear resistance at 2097, and our clear support is 1952. That is the range to be watching on CWEB this week. And if we break bullish, we have a gap to fill to the upside, and if we break bearish, we're looking down at the next support level of 1894. We are still in a weekly uptrend, believe it or not. With the size of the pullback we've seen of 40% or so, this was the last weekly high or low. And then we ran really hard. We didn't establish any support that month. And now we're giving it all back. Every week is a lower high. So bulls must hold 1751, but it's worth watching for a hold of that support. And then, of course, if we hold 1751 and do get some bounce follow through, we have to be watching for the head and shoulders pattern on the weekly if that were to play out. But let's see if we can get a bounce off of that support level. I'd like to see one more leg down to get closer to that support and to see daily oversold conditions and then try and make a play off of 1751 support. TRUL, a little bit of recovery from the bearish news. I said I might have misspoken a bit yesterday in terms of my exact wording where I talked about the CEO and previous fraud stuff. It wasn't fraud. They were subpoenaed. She was subpoenaed and nothing resulted from it. I call that smoke. If you're getting subpoenaed by, I think it was the FBI, that's smoke. If your husband gets arrested by the FBI, that's fire. So that's enough for me to stay away from the company. No, she was not specifically charged with anything, but there's a lot of smoke there. So daily inside bar. With a bull break, if we can get over 1587, anything under 1810 will just be a lower high. And if it breaks bearish, of course, the bounce has no follow through at this point. So all about the short-term tightening range, as is the case for a lot of names. A lot of daily inside bars today. And I want to talk a little bit about anticipating inside bars. CGC was very easy for us to say an inside bar is likely today. And it's because of the huge range of the previous day and the fact that we opened near the middle of that range. So unless the CGC bulls were going to be able to see, let's see, the high was about 47. Let's say we opened at 45. We're talking about 4.5%, 5%. So unless the CGC bulls are going to open a couple percent above the close of yesterday and then see an additional 5% gain throughout the day, we can anticipate the most likely scenario is a daily inside bar. And what that can have us do or help us do is prevent us from over trading. If I see a daily inside bar, that tells me to chill out and sit back and wait, because I know that we can just wait for the daily inside bar to give us some clear direction breaking the following day. So it tells me likely going to see declined volume and tightening range, and it can be one of those keys for pumping the brakes. As I talk about, we want to be really aggressive and pump the gas when we're in blue sky breakout or when we have very favorable trading scenarios. And when we don't, we got to pump those brakes and change our trading style and cut back our trades and be more selective. And being able to recognize when we're going to have a tightening range kind of day is a way to pump those brakes. IAN, solid bounce, but could not hold on to those gains today. Story of IAN the last couple months. So anything on the daily under 650 was just a lower high. We had a bounce. We were looking great at the high of the day, but we gave it all back and closed near the low. And we're looking back down now at 568 is the only nearby support. Just a daily lower high being set, and we'll see if the bears can follow through with lower lows. ZYNE stood out as a lead bull yesterday. Got some continuation today, but also not a ton of follow through. If we lose the hourly uptrend, which we actually did, double top and then lost 1328 support. So we are no longer in an hourly uptrend, which means look for daily consolidation. If we break 1302 tomorrow, the bulls have to form a daily higher low compared to 1135 and try and keep the daily uptrend. CL, again, I like the clarity on the 2-day time frame. Have to see a higher low form compared to 1416. We're building a base of support here, but we have to see follow through now. Bulls want to make their way up closer to $17 the better to try and get back to the midway point of this tightening range. And looking at OH, same deal. 1077 is key support. We're building a base. We're playing defense. The bulls are, but they need to see some offense and need to get back over $12 to try and get within this tightening range. And looking at it again on the 2-day chart, low, high, higher low, scouting a lower high, but we have to see bull follow through from here. And last, we'll wrap it up with KHRN. So KHRN, another one that's choppy on the daily time frame. So I look at the weekly for clarity, and we're looking at a weekly tightening range with our low, high of the bull move, higher low, and we're going to look for a lower high compared to 375. Bulls ideally want to get over 335 to try and get a clear shift in momentum in their favor, but I do expect this weekly time frame to tighten up at least probably into June before we get a clear break. So that's where we stand overall. As always, the S&P 500 will be important tomorrow. We saw a sell-off in the S&P 500 at the end of the day, which is not surprising. Last time we closed strong was Friday, and we saw a big-time lower open. Any bull that held on Friday was burned in a big way, and the headline risk favors bears. So lots of profit taking at the end of the day, not really surprising after what we saw on Friday. So inside bars to be watching tomorrow, ACB earnings reaction to be watching as far as how the bigger names are going to respond. And we'll check back in tomorrow. See you then. So we'll wrap it up here with a little bit more of Colorado Winter Wonderland, and had the fortunate encounter of meeting a member of the Chart Guys who owns a gem shop in Estes Park right outside of Rocky Mountain National Park. And he hooked it up with some fossils. So now that I am closing on a house, I guess I have to start accumulating things. I haven't had more than what fits in my car for the last 8 years maybe. And now I got some really old fish. And some mollusks. And some sea star guys. Don't break them. Sea star guys. So I guess I'm a fossil collector. We'll see how that goes.